we might have had some progress on the jobs market, but don't expect it to last. That's according to the latest story from Phil Izzo, who's a big cheese at the Wall Street Journal. Thanks for being here.
Always a pleasure.
You're always very modest too, but you're a big cheese. So tell us about his economic data. I love economic data, and I love talking about it with you.
Over the last 2 months, we saw a big drop in the unemployment rate. We dropped a half a percentage point to 7.8, which we got last week. But the economists say that don't expect those drops to continue. That basically we had a lot of catch up with that number, basically getting to where we are. But growth is going to be slow. Not only this year.
Economic growth, we're talking, and jobs growth.
Yeah, economic growth and jobs growth. Well, the economic growth, the slow economic growth is going to lead to the slow jobs growth. Basically what they're saying is there's no reason to expect fast growth through the rest of this year, through at least the first half of next year. And that slow growth is going to translate into slowly adding jobs. They don't think that we're going to even get down below where we are right now in the unemployment rate till sometime past June 2013.
Wow. Wow. I mean, that's basically the best part of a year. Not quite a year, but
9 months,
that's 9 months. I mean, that is absolutely awful. Did they point to any ways this can be fixed? Or is this just the world in which we live now?
Part of what we're seeing is that there's a lot of things weighing on growth. There's all these concerns about Europe. It looks like China's slowing down. We got those export figures today that show that it's a little bit difficult. I mean, the U.S. is actually doing not too bad compared to the rest of the world, but you know, there's only so much we can do.
But the rest of the world appears to be a disaster.
Exactly. And then we have our own disaster waiting just a couple of months away if we don't deal with the fiscal cliff, which is this, you know...
massive tax increase and spending cuts altogether like that.
Exactly. And they're supposed to hit in the beginning of next year, and the economists expect that even if there's some agreement, there's probably still going to be some retrenchment. You know, even if they don't pass all the tax increases, there's going to be some tax increases, like the payroll tax cut, for example. No one's talking about increasing that, and that's, you know, that's an increase basically on anyone who works.
You know, one of the things that been finding very interesting this year is that the engine of growth for this recovery has been manufacturing, which is not traditional, and it's not been massive, but it's been there as something. And then we've seen manufacturing sort of falter as it did in Europe and in Asia too. Is that part of this problem?
Yeah, definitely. I mean, manufacturing is especially because exports depend on that. And there's not a lot of demand overseas. When there's not a lot of demand overseas, we don't produce as much. There's not as many jobs. It's a self-fulfilling cycle. And manufacturing is definitely part of that. It's definitely one of those things weighing on growth. It's not as strong as it was leading into the recovery. A bright spot has been housing, which is kind of nice considering how bad it was leading up to.
Well, it wouldn't have to be very good to be better than it was.
But the problem is we're at such a low level that, you know, even slightly up looks pretty good, and it's not going to be enough to drive the sort of, you know, like greater than 3% growth we're going to need to bring down the unemployment rate in a quick way.
Oh well, there you have it. Thank you very much.
Thank you.
Come back with better news next time, please.
I'll do my
Phil
best.
Izzo of the Wall Street Journal. Phil's written this great piece here, and you can find that on WSJ.com. There's lots of good economic stuff in there, so be sure to check that out.